Hello, friends. Today we're going to talk about the student loan securities market. The reason that we're talking about this is because, as we all know, recently the Department of Education came out and they excluded commercially held FFEL loans from the debt cancellation that President Biden announced on August 24th. Now, there's a reason why this is happening, and it has to do with the fact that these loans create great revenue for investors. In order to find out why these loans are special and continue to get excluded from anything that the federal government does, even though these are federal student loans, we have to go back to 2008 and the Great Recession. So during the Great Recession, financial institutions really were starting to struggle. A lot of them were going out of business, they were going bankrupt, and that was bad because the way that FFEL loans work is that a financial institution would lend the money and then the government would guarantee it. Obviously, if you have a bunch of subprime mortgages, you don't want to be dealing with student loans. So what the government decided to do in 2009 is they wanted to create something new, a new entity that would manage the student loans. Now, there was talk about creating direct loans, but at the time, the economy, like direct loans were already around, but they were in the minority. For example, 52 billion FFEL loans were generated in 2007. Only 12 billion direct loans were generated. And that's according to an article in The Nation from 2009. So this, as you can see, it's a big gap, right? Obviously, the FFEL loans were more popular and would remain that way for a few more years. Well, the government decided, hey, we need to take on all these loans, which they did. They bought student loans from financial institutions, banks, and things like that, and they held them until they established a new private market financing vehicle. And what they would do is they would give the capital right to the lenders. They spent $6.5 billion in private FFEL loans. So basically, this was a bailout of student loans. You don't hear about it a lot, but as somebody who had a student loan at the time, this is pretty much how it went. You would get a call, and it was a commercial lender, and they would give you this spiel about how like you could consolidate with them and you wouldn't lose any of your federal student loan benefits, and they were going to give you a lower rate and all this stuff. So of course, like at the time, I had some student loans that had like 7% interest rates. Some of them had variable interest rates, and the economy was so bad. So if I could reduce the interest rate, I was all for it. And I thought, hey, consolidating might be good, right? Yeah, not so much. But at the time, it seemed like a great idea because of the way that the economy was going. And I was in Michigan really, really struggling with, by 2009, I had 3 part-time jobs because I could not find a full-time job. It was kind of a nightmare. So anything that I could do to put myself in a better financial position, I was doing. And a lot of people were doing this. So you have these commercial lenders call you up, offer you, a good rate, and you consolidate with them. Now, what the government could have done at that time, they could have used that $6.5 billion to create more direct loans, like invest that in the direct loan program. But they didn't do that. Instead, they basically spent that money buying up FFEL loans. And then after they did that, they ended up going back to some financial institutions and these lenders like Sallie Mae and PHEAA, and giving them these sweetheart deals where they would be able to service the commercial FFEL loans. This was a terrible idea. Also, because the Department of Education didn't monitor any of these commercial lenders, they just kind of did whatever they wanted. But here's the part that's really, really important, and the part that explains why right now the Department of Education is like, well, we're not going to we're not going to extend the debt cancellation to FFEL loan holders with commercial lenders. The reason that that is happening is because what was also created at this time was that lenders, they were told to use the money that they got, basically the bailout funds, to create new loans, and then they also could start packaging the loans into securities, and then you would sell them back to investors. And then the government would guarantee it. So it's this perfect thing, because if the borrower defaults on a government-backed student loan, the student loan will still be paid. And you also can take that defaulted loan and sell it on the secondary market. So there's just no downside to these things. And of course, people like, entities like Goldman Sachs and Sallie Mae and American Education Services and all that, so they just love this, because what ended up happening is that they got all this money funneled into their businesses to manage these loans. Now, once they did that, they got all this money and they started creating these securities with these loans, it became even bigger business. College was already big business, the student loan industry was big business, but it became even bigger because now you've got securities in the mix. So these securities are good investments for the most part because they are guaranteed by the government. And like I said, you can sell the defaulted ones on the secondary market. It's just a win-win. The other day, yesterday maybe, a lawsuit was filed by 6 states saying that now that there's debt cancellation, people with FFELP loans are being enticed over to direct loans through consolidation, and basically that's hurting these companies. This is an interesting lawsuit. I did read through it, and I found myself chuckling a little bit because they try to present this argument that they care about working class people. But really, what they care about is the revenue that these securities are producing, because people are getting payouts every month and other people are invested in these securities. And if there's some debt cancellation, it could cause premature maturity, which is not great for a bond. But it also means that that bond date that you might have, 20 years from now is no longer there. For example, American Education Services tried to put my loan through redisclosure right before it was consolidated into a direct loan. And the reason that they did that is because they had me set up on a payment plan that was lasting from 2015 to 2043. Now, actually, the loan started in 2006. So, they had spread out the payment term because they can bundle it into into different securities. And they started a new loan term in 2022, which is just crazy because it was a week before the loan was consolidated and sent to another company. But they did that because obviously the loan is being paid off in 2022. That's not great for the bond because they're expecting a payoff in 2043. So this is the problem. If a lot of people transfer their FFEL loans back to the federal government for the debt cancellation or for any reason really, that reduces the amount of FFEL loans in the market, in these securities, and that's a market that's going to die unless commercial lenders have something to say about it. If you want to know why these FFEL loans are still around, even though none have been created since 2010, one of the reasons that so many are still around is because the lenders don't want that revenue stream to die. So they're going to push it out as long as they can. And that's why you have the redisclosure of your loan over and over again, or, they push in pay to head status and then they make you jump through hoops to get out of it. They just want to extend that loan. They did this with direct loans in a different way, not because they're securities, but because you can make money off the interest. The public service loan forgiveness program is a perfect example. Fed Loan was servicing it, which is also part of the conglomerate that American Education Services is a part of. And what they were doing is people were like, fighting in Iraq and teaching and firefighters and police officers and all that stuff. And they would send in their payments. And when they got to 120, then Fed Loan would say, oh, you know what? You were on the wrong payment plan all that time. You need to start over 10 more years. Obviously, this is not how the program was supposed to go. And it was very frustrating for people because they did what they thought they were supposed to be doing. And then they were told, no, you don't get that loan forgiveness that was promised to you for your public sector work. You just got to keep doing it. And this was a problem because it held some people in public sector jobs, people who wouldn't have stayed there as long. They did their 10 years and then they wanted to get out. Like, for example, I know someone who's in the military and he didn't take a private sector job. He stayed in the public sector because he couldn't get Fed Loan to certify his 120 payments. So he ends up working an additional 3 years in the public sector, passing up private sector jobs. So this is what these commercial lenders do. Even though Fed Loan was doing direct loans, they still were prolonging the process because things like the public service loan program and the income-based repayment program reduce the amount of the loan principal and the interest that borrower is going to pay over time, and a portion of their loan is going to be forgiven. So obviously that means that Fed Loan was going to make less money off of those loans if they really just let people do their 120 months of payments and then the rest of their loans were excused. So to prolong that, they just told people you were on the wrong payment plan or you didn't, your payments don't qualify, things like that. Some people, they told them after 10 years, nothing qualifies. You got to start over. The other thing is the income-based repayment plan. Like, it's something that I was rejected from several times, even though I was pretty poor. But the reason that I was rejected is because if I had gotten on it back when I really needed it, I would have paid my loan for 20 or 25 years, and then the rest would be excused. Well, that means you only pay a certain portion of the loan. That means the rest of it is forgiven. No, that's not a system that the commercial lender likes. So they just deny people the income-based repayment plan, and they deny people their public service loan forgiveness. That is why we have 2 waivers for those 2 programs right now. But those waivers started way before the debt cancellation, but we did not see lawsuits. The public service loan forgiveness waiver actually started in October 2021, and it lasts till October 2022. And then the IDR audit, it started April 2022, and you have until, well, at this time, things may change at any moment, but at this time you have until the end of the year to do it. Both of these require you to do a direct consolidation, so it takes the FFEL loan out of the commercial lender system and moves it back to the government. But we did not see lawsuits in either case. And here's my theory why people weren't quote-unquote outraged about those 2 programs, the waivers for the public service loan forgiveness and the IDR. The reason that we didn't see the outrage and we didn't see people jumping to do the direct consolidations is because those programs are murky for a lot of people. They have all these rules and they can be really hard to understand. But when you say, hey, we will cancel up to $20,000 of your debt if you had a Pell Grant, and $10,000 of your debt if you meet the income threshold and things like that, people understand that a lot better than, hey, here's the public service loan forgiveness program. Your job may or may not qualify, even if it's kind of in the public sector. There are a lot of rules and hoops to jump through for that. And then the IDR, it's like, well, actually, we've got several different programs, and this one's based on, it's more complicated. But when you say debt cancellation, people understand that. And I know I was trying to spread the word that people should consolidate as soon as possible. And I think some people that I talked with on social media actually did it, which is great. I wish that more had. But Now you have debt cancellation, and people really like the sound of that, even though, ironically, $10,000 probably is not going to do that much for most people that have FFEL loans because they probably have forbearance interest added to the principal. Even so, they want it because it is nice if you can take some of that off of your loan. You're just paying less interest over time because the principal's lower. But there is a major revenue stream that is being affected by that. If even a quarter of the borrowers that have FFEL loans did a direct consolidation, that's going to be a hit to these commercial lenders and also to the securities market. So it's not just the lenders, it's also investors and banks and in towns, like these student loans are in bonds and people buy them. So that's why the government is kind of like backing off. And it's also why you haven't heard the outrage as much when it came to the public service loan forgiveness waiver or the IDR waiver, because people are not going to jump at the chance to consolidate their loans for those things because they don't understand that, A, they're going to retroactively count all these months for you and all these payments, and you might see complete forgiveness if you do it. And B, they don't understand what's going to happen to their interest rate and their loan term if they do consolidate. And the federal government is not great at explaining these things. The Department of Education does not make it clear what FFEL loan holders will get if they consolidate. And now, only now, after they shut the door, do they make it clear that, if you had done that direct consolidation, you could have taken advantage of the debt cancellation, which is just terrible that they did that. But that is why all of a sudden, just very abruptly, they said, no, we're just done. Commercial lenders with FFEL loans, we're just going to leave them alone, because there are huge financial ramifications for the securities market, for investors, for towns, for anyone who's invested in those securities. That is also one of the reasons why Congress was sure to make sure that you could not really discharge private loans in bankruptcy, because these FFEL loans, they're federal student loans, but they're held by a private lender. And they created this big market where, you could turn the loans into a big security and put it in a bond and all that stuff and make lots of money. So they didn't want people to be able to discharge those in bankruptcy, because if you discharge it in bankruptcy, then that is a time when the investors lose. They don't get the money. And this is the game. The game is these FFEL loans are just great business, and they want to keep them going as long as possible. And that's why the redisclosure goes on. That's why the government constantly backs away from them. Anything they do, they just kind of back away from it. And you can see this, like when the pandemic payment pause started, there was some fear in the investing world because they thought maybe the government would extend the payment pause to FFEL loans. They didn't, of course, but there was some fear initially, because if that had happened, people are expecting payments like every month from these things. And if there was a payment pause, that would have been catastrophic for that market, because they're bonds, So that's why the FFEL loans are so, always pushed to the side. And then the government, they'll make excuses like, not too many people have them. Plenty of people still have them. And the reason that most of us still have them is because we were, put in forbearance forever instead of given an income-based repayment plan, or our loans went through redisclosure several times. And the government knows that. But the problem is that the people in the government, they're also invested in these securities and things like that. So they don't want to see that market go either. So that's a little bit about slabs. There's a lot on this topic, but you don't need to know all of it to be able to understand why this is happening. But I think it could be helpful for people who they don't quite understand how these FFEL loans work and why they are such a hassle for people, why they're a little bit different than if you have a direct student loan. So that's all for now. Remember to like and subscribe, and I'll see you in the next one.